This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC and its allies led by Russia on Monday agreed a small oil production cut to bolster prices that have slid on fears of an economic slowdown. The oil producers will reduce output by 100,000 barrels per day, BPD, amounting to only 0.1% of global demand, for October, and also agreed they could meet any time to adjust production before the next scheduled meeting on October 5. The decision essentially maintains the status quo as OPEC has been observing wild fluctuations in oil prices, being pulled by multiple factors in both directions. Top OPEC producer Saudi Arabia last month flagged the possibility of output cuts to address what it sees as exaggerated oil price declines.
Europe's gas prices surged, its share prices slid and the euro sank on Monday after Russia stopped pumping gas via a major supply route, sending another economic shockwave through the European Union as it struggles to recover from the pandemic. EU governments are pushing through packages worth billions of dollars to prevent utilities being crushed by a liquidity crunch and to protect households from soaring energy bills, after Russia's state-controlled Gazprom said it would stop pumping gas via the Nord Stream 1 pipeline due to a fault. Europe has accused Russia of weaponizing energy supplies in retaliation for Western sanctions imposed on Moscow over its invasion of Ukraine. Russia blamed sanctions by the collective West for causing the gas supply problems.
Moving on to the top news in the energy sector.
European Union countries' energy ministers will discuss options to rein in soaring energy prices, including gas price caps and emergency credit lines for energy market participants, a document seen by Reuters showed. EU ministers will meet on September 9 to discuss urgent bloc-wide measures to respond to a surge in gas and power prices that is hammering Europe's industry and hiking household bills, after Russia curbed gas deliveries to the bloc. A draft document, seen by Reuters, said the ministers will consider options including a price cap on imported gas, a price cap on gas used to produce electricity, or temporarily removing gas power plants from the current EU system of setting electricity prices.
Germany's government will use income from windfall taxes to lower end consumer prices for gas, oil and coal, German Chancellor Olaf Scholz said on Sunday, announcing measures to mitigate the impact of rising energy prices on its population. Scholz said the government plans to tie certain social benefits to the current or expected inflation rate in the future and will earmark €1.5 billion, $1.49 billion, for a discounted public transportation offer. The measures are part of a €65 billion package the ruling coalition government agreed on Sunday to help citizens and companies struggling with rising inflation in Europe's biggest economy. Next, we have the top news in metal markets. Stronger than expected shipments of platinum to China in the first half of the year spurred shortages elsewhere as supply declined from mines and recycling, the World Platinum Investment Council, WPIC, said on Monday. It was difficult to track what happened to some of the Chinese imports, so the platinum market was in surplus on paper, but on the ground tightness sent lease rates surging to the highest levels in a decade, the WPIC said in its latest quarterly report. It certainly is weird to have a really big surplus published yet unavailability of metal in the spot market, said Trevor Raymond, the WPIC's head of research.
Swiss steel mill Stahl Gerlafingen has gained regulatory approval to put staff on shorter working hours to contend with soaring energy bills that will cost in a month what they normally cost in a year, the NZZ am Sonntag paper reported. High energy prices threaten our existence, the paper quoted Chief Executive Alan Creter as saying of the mill owned by Italy's Beltrame Group. It may be that no one has to go on short-time work. But it could also be that we have to send part of the workforce or all 560 employees home.
We will now look at the top news in the agricultural sector.
Iraq's trade ministry said it plans to import more wheat for local flour production to decrease dependence on more expensive imported flour, the country's state grain buying agency said late on Saturday. The trade ministry is to adopt new mechanisms of wheat buying, the agency said, without providing details. Iraq, a major grain importer, has been taking urgent measures to secure strategic stocks of wheat and food supplies amid a surge in prices following Russia's invasion of Ukraine.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.